Good afternoon, everyone, and welcome to today's webinar. My name is Genevieve Strand. I'm the Director of Advocacy here at ASTA, and on behalf of our advocacy team, thanks for taking time to join us today. With the majority of the world now working remote, our external webinar service does sometimes experience some technical difficulties driven by high traffic volumes. Should you experience any of these difficulties, please try logging off and dialing back in. If that doesn't work, please don't fret, as this webinar will be recorded and hosted on asta.org. Before we dive into today's presentation, I'd also like to point out a few important features on your screen that will allow you to interact with us via the web. We will be answering questions at the end of the presentation. To ask the questions, you'll use your GoToWebcast pane. Near the bottom of this pane, there is an area that says Questions. If you click on the arrow next to where it says Questions, it will open up a window pane, and this is what you'll use to communicate with us. Though all audience members are muted, we certainly want to hear from you, but we have so many folks on the call today that background noise would be prohibitive, and we want to ensure everyone can hear the entire presentation. Finally, again, remember that this webinar is being recorded and will be available for on-demand viewing at asta.org as soon as possible. So today, I look forward to being joined on the call by ASTA's very own Zane Kirby, Evan Peck, Peter Labasso, and myself. So here's a brief overview. So Zane is going to kick us off with a recap of our 2020 efforts. Evan is going to look at the PPP program. Peter will cover the Employee Retention Tax Credit, and then I'll walk you through the unemployment insurance programs. After that, we'll open it up to questions. So now, without further ado, I'd like to turn it over to President and CEO of ASTA, Zane Kirby.
Thank you very much, Genevieve, and good afternoon, everyone. And I want to wish everyone a Happy New Year. If you can still do that on the 5th of the month, I hope you can. Well, we woke up this morning to the sad news that Butch Stewart, the chairman of Sandals, died yesterday. Butch was an industry icon and a savvy business leader. More importantly, he was a husband, father, and grandfather. We know those closest to him, his family, and the extremely tight-knit management team at Sandals are going to miss him the most. But we also at ASTA express our deep condolences to Butch's family and to the management team at Sandals at his passing. No brand that I know has painted "We Love Travel Agents" on their private planes as Butch did. The industry has lost a true friend, and a mighty oak has fallen in our midst. So again, to Adam and Gary Sadler, to Garth, to Alice, and everyone at the Sandals organization, ASTA expresses our deep condolences. Now, if 2020 has taught us anything, it's that things that you don't plan for and can't necessarily control can affect your business greatly. And that sometimes real troubles in life are apt to be the things that rarely cross our sometimes worried minds. The highlights that you see on this page here enumerate the enormous amount of work that was done by you as the ASTA organization to educate lawmakers on the need for COVID relief last year. Now, when times are good, most of us want the government to deliver the mail, defend the border, and secure our rights. But when the pandemic hit last March, no one wanted the government to be a passive observer of our problems. We wanted help. Thankfully, ASTA had already organized and nurtured congressional relationships prior to the pandemic. And during the pandemic, we swung into action. We testified before the U.S. House of Small Business Committee, which oversees the SBA. We communicated with the Treasury Department. We talked over and over again with congressional leaders to fight for programs like unemployment insurance for our IC members. We are your national staff, and we're so grateful that when we asked, you answered the call. As you can see here from the unprecedented amount of activity that was done last year, you picked up the phone, you wrote your congressional leaders. Some of you got on a ASTA organized Zoom calls with your member of Congress. Thank you. These were powerful and poignant moments where you could relay face-to-face the effects of the pandemic on your business and on life. I know that pressure and that communication had an effect on our congressional leaders. Now, many wrote letters to the editor to influence consumers and policymakers via local and national media. Your efforts were critical to securing relief programs in last March's CARES Act. Now, we were appalled that legislators didn't offer additional COVID relief when they recessed for last August or before the November elections. We know that many businesses, including ASTA, suffered as a result. But we are relieved, however, that Congress finally came to an agreement on additional COVID relief programs that many businesses can take advantage of. My colleagues Evan Peck, Peter Labasso, and Genevieve Strand are going to detail for the details of those programs for you in a few moments. Finally, I just want to remind everyone that we are still on the job. Thankfully, the vaccines provide hope for travel's resumption, but we know that it's going to take time for normalcy to return. And ASTA's primary job is to remind our elected officials that it is their moral obligation to help those of us in the travel industry whose lives have been most affected by the pandemic. In addition to the programs that, again, my colleagues are going to discuss, we're going to continue pushing Congress to pass industry-specific relief bills, such as in the Restart Act. So I want to thank you again for your support of ASTA. We are proud to be your Washington, D.C. management team, and we look forward to seeing you in person at an ASTA event later this year. To kick us off, I'll now turn the time over to ASTA's Executive Vice President of Advocacy, Evan Peck. Evan.
Well, thank you, Zane, and thanks everybody for being on the call today. As Zane said, it's been, well, last year, I guess, was quite a year, a lot of activity, really unprecedented level of activity on the advocacy front. Very frustrating at times. I'm sure it was for you all as well. But we're happy to be in a point where we can help you guys get access to these many relief programs that are in the new bill that was passed at the end of the year, as opposed to banging our head against the wall in terms of when is Congress going to get off their duffs and take action. So happy to be in that position, and we'll just get started on one of the main programs. So this bill that passed at the end of the year was 5,600 pages long. That is the longest piece of legislation by page count ever passed by a Congress. The CARES Act in March had the biggest price tag. So in one single year, you saw the two biggest pieces of legislation ever go through the national legislature. But the PPP is kind of the main one, or the first one we wanted to talk about. There's really three buckets, as Genevieve said. The PPP, Earned Employee Retention Tax Credit, and expanded unemployment benefits. So I'm going to focus on PPP today. So what does the bill do? It sets aside $284+ billion for the PPP. About $250 billion of that is set aside for second draw loans. That means somebody who's already taken a PPP loan can take another one now. Of that amount, $25 billion is set aside for borrowers with 10 or fewer employees, which is probably a good chunk of folks on the phone. And $35 billion of the total amount is set aside for new PPP loans, first-time PPP loans. And of that, $15 billion is set aside for borrowers with 10 or fewer. That's kind of the top line numbers on the PPP. I know most of you are going to be focused on the second draw PPP loans, so we'll spend most of our time talking about that. There are some limitations, limited to businesses, which includes ICs, with 300 or fewer employees currently. In the CARES Act, it was 500 employees, but that count was established pre-pandemic. So this is current employees. Have used or will use the proceeds of your first PPP loan. That's pretty straightforward. And at least a 25% revenue reduction or reduction in gross receipts in any 2020 quarter versus any of the same quarter in 2019. Sadly, all of our members are going to easily cross that threshold. The terms of these second draw loans, 2.5 times your monthly payroll. And that's the average monthly payroll in calendar year 2019 or the year prior to the origination of the new loan. Most people, I think, will choose 2019. And importantly, the definition or the base of payroll is expanded to include group life insurance, disability, vision, and dental insurance. So the base upon which the loan size is calculated has grown, not substantially, but it has grown. Maximum loan size is $2 million. It was $10 million in the CARES Act. And you saw a lot of large entities take advantage of that. Some, like the Los Angeles Lakers, got a lot of bad press about it. Not going to see that here to the same extent. Interest rate and term, 1%, 5 years, if it's not forgiven. I think you'll see the rules are flexible enough that most of these will be able to be forgiven quite easily. The borrower can choose the covered period to spend the proceeds of the loan. So in the CARES Act, initially, you had 8 weeks to spend it, and then they changed the rules in the middle of the year, and you had to pick between 8 weeks. You could spend it over 8 weeks or over 24 weeks. Now you can customize your covered period anytime between 8 weeks from when you get the loan to 24 weeks. So it gets flexibility there. Simplified applications for loans under $150,000, and applications will be accepted through the end of March. Moving on to forgiveness for the second draw loans. Forgivable expenses are expanded, which is important. Under the CARES Act, it was payroll, mortgage, rent, and utility payments. Added to that now is software, cloud computing related to HR or accounting, supplier costs that are quote-unquote essential to the borrower's operations, and PPE, personal protective equipment. As before, for full forgiveness, the amount you spend has to be at least 60% payroll. And there's a simplified forgiveness application for loans that are under $150,000. Under the CARES Act, if you got an EIDL, SBA Emergency Economic Injury Disaster Loan advance, which is up to $10,000, you had to take that off of your PPP forgiveness amount. You no longer need to do that. And the existing safe harbors in the PPP program continue to apply. So if you're not able to bring your employees back because of, for example, CDC guidance related to travel, you will not be penalized on forgiveness for that. This is important too. They made some tax changes to how PPP's loans are treated for tax purposes. So effective in 2020, so retroactively, and future years, forgiven PPP loans are tax exempt, not required to be included as your gross income. There's no negative tax treatment whatsoever for getting a PPP loan forgiven. Tax deductions that you're normally allowed to take, paid for with loan proceeds, you'll be able to take as normal. You won't be penalized on that. This is something that we advocated for, among many other things, over the past few months. And the total, if this change hadn't been made, the total tax increase to small businesses across the country would have been $120 billion. So we're happy about that. Now, I didn't want to get too far into the weeds here because the formal guidance hasn't come out yet from the SBA. So the next steps, SBA is required by this bill to issue guidance 10 days after the bill was signed into law. That would be tomorrow, January 6th. We'll see if that happens. Probably not, is my guess. I think you're looking at later in the week or maybe even early next week. This is humorous to some. Congress sat around and twiddled its thumbs for 8 months. And then all of a sudden they gave SBA a deadline of 10 days to write new regulations, over the holidays, by the way, as well. Anyway, once we get the SBA rules on these new aspects of the program, we will write it up for our members. We'll send it to you directly. But that's something that we're going to need to wait for. And I think the banks are going to need to wait for as well before this program can truly launch. So our recommendations today is to contact your bank, your preferred bank. It doesn't have to be the same bank that you used during the first round. I saw that as one of the questions. It does not have to be the same lender. It's up to you. Again, once the SBA comes out with its rules, I think banks will take a little while to digest that and then decide if they want to participate. Again, I think they will. And remember, last go-around, fintech firms like PayPal, Intuit, and a number of others participated as PPP lenders. PayPal in particular had a very, what looked like a user-friendly website to apply for loans. So if you're having trouble finding a traditional bank that's willing to participate, don't forget to look at those fintech firms. Another recommendation is to contact your accountant today for those PPP tax implications that I just mentioned, and also, as Peter's going to talk about, the employee retention tax credit, which is getting more generous, also has aspects that are retroactive to 2020. So that's another reason to make sure you're maximizing your tax benefits out of these programs. A lot of these benefits are going to flow through the tax code. So whether we like it or not, we're all going to have to call our accountants, I think, on this one. So yeah, that's kind of an overview. I want to turn it over at this point to my colleague, Peter Labasso.
Thanks, Eben, and Happy New Year to everyone listening here today. Now we're going to take a look at the changes made to the Employee Retention Tax Credit, or ERTC. As was the case with the PPP loans, the ERTC was part of the original CARES Act that was passed last March. But the new legislation implements a number of changes that increases both the dollar amount of the credit as well as the pool of employers that are going to be able to claim it now. To put some of the key changes into some context for you today, I think it'll be helpful to first review what the ERTC looked like as originally enacted under the CARES Act. I think this is especially useful here today because I suspect many of you never looked into the credit because up until now, the ERTC wasn't an option for anyone who had received a PPP loan. So what is it exactly? The ERTC is a federal tax credit that is available to employers of all sizes that have been adversely affected by COVID-19. The credit is applied to the portion of the Social Security and Medicare payroll taxes that the employer is obligated to pay. And where the amount of the credit exceeds what the employer's payroll tax obligation is for the quarter in question, the difference can be applied to the employer's tax liability for a future quarter. Now, under the CARES Act, the dollar amount of the credit the employer was eligible for equaled 50% of the employer's qualified wages up to the first $10,000 of annual employee compensation. So with this $10,000 cap, the maximum credit available per employee was $5,000. To be eligible to take the credit as it was initially enacted, the employer, again with any number of W-2 employees, must show either a decline in revenue of more than 50% as compared with the same calendar quarter year over year, so comparing 2020 to the same quarter in 2019, or alternatively, if there's a partial or complete suspension of operations due to a COVID-19 related shutdown order. While a 50% plus drop in revenue is pretty drastic, unfortunately in our industry, most travel agents could easily satisfy that eligibility requirement. But where it got problematic for many in our industry, and why I think relatively few advisors claimed the ERTC, was the rule that rendered PPP loan recipients ineligible to claim it. So essentially, up until now, it was either one or the other. If you got a PPP loan, you couldn't claim the ERTC. And as you can see, under the CARES Act, the credit was in place from March 13th through the end of last year. Now, with that background, let's take a look at what aspects of the ERTC changed when the new legislation, the Consolidated Appropriations Act, or CAA, was passed in December. First, the eligibility rules changed. Now the employer need only show a revenue decline of more than 20% year over year. In this case, with 2021 revenue being compared against the same quarter in 2019, pre-COVID. This means that many more businesses impacted economically, but to a lesser degree, will now have access to the ERTC program. And the other qualifying criterion, the full or partial suspension of operations due to a COVID-related shutdown, remains the same as it was under the CARES Act. But again, since few travel agencies had any difficulty establishing that their revenue had declined enough to satisfy the old 50% threshold, this change is not likely to be much of an impact. What is much more impactful to our members is this next one, namely that PPP loan recipients are no longer deemed ineligible for ERTC. In other words, PPP recipients can now receive this tax credit. However, to avoid double dipping, there is a limitation, and that is that the credit applies only to those wages that are not paid for with forgiven PPP proceeds. But best of all, this change that I just mentioned has a retroactive effect. It applies retroactively to the original CARES Act enactment date, which again was March 13th of last year. This is important because this means that those of you who missed out on this tax credit for calendar year 2020 due to ineligibility on the basis of having gotten a PPP loan can now claim it. And in addition, you can also claim it for the current calendar year 2021. And again, as you can see, the effective dates for this new provision run through June 30th, meaning that the first and second quarters of calendar year 2021 are covered. But there's more good news. Beyond expanding the pool of employers that are eligible to claim the credit, the amount of the credit for 2021 is higher as well. Specifically, the credit now equals 70% of the employer's qualified wages, and that's again up from 50% under the CARES Act. Note too that the $10,000 limitation is now quarterly rather than annually, as was the case previously. Taken together, this means that employers can receive a maximum total per employee credit of $14,000 in 2021, as compared with just $5,000 for 2020. Another enhancement is the increase in the large employer-employee headcount from 100 employees to 500 employees. Now, this is noteworthy because employers that are deemed small employers under the law, that is to say those with 500 or fewer employees in 2019, are evaluated under a broader definition of qualified wages. It's a little bit complicated, but suffice it to say that this change means that in many cases, employers who had between 100 and 500 employees in calendar year 2019 will stand to receive a higher credit in 2021 than they were entitled to in 2020 under the old rules. And finally, the CAA also provides that employee health plan expenses may now be treated as qualified wages for ERTC purposes, even if no wages are paid to the employees in question. So if the employer decides he needs to lay off or furlough some of the employees, but continues to provide those furloughed employees with health care coverage, those expenses can be treated as qualified wages for purposes of the ERTC. And it's important to note that this change is retroactive to 2020 as well. I want to stress that these are by no means the only changes to the ERTC. Frankly, time doesn't permit us to have an exhaustive analysis, but I did want to highlight the ones that I thought would be most relevant to the typical agency owner. So what are the next steps in play here? We have a few recommendations. First, employers are advised to reevaluate their ability to utilize the credit under the new provisions of the CAA. In particular, as we noted, employers who received a PPP loan in 2020 may be eligible to claim that credit retroactively, even though they couldn't claim it at all under the CARES Act. And there's another wrinkle in the new law, which provides that small employers, again, those who had up to 500 employees in 2019, can obtain the credit in advance in 2021. But above all, as Eben noted earlier, we strongly suggest that you get professional advice from your accountant or your tax advisor as soon as possible. I think it's really important just to reiterate that because, frankly, this is a really complicated subject area, and you just don't want to miss out on getting an available tax credit because you either weren't sure if you were eligible or if you didn't know what steps you needed to take in order to claim it. So by all means, please reach out to your tax professional. And with that, I will now turn it over to my colleague, Genevieve Strand, who will cover the federal unemployment compensation programs.
Thanks so much, Peter. So as Peter mentioned, I am going to focus my time today on the extension of those new unemployment programs that were created under the CARES Act. So the original programs fell into 3 buckets, so we're going to go over the extension for each of those individually. So first was the Federal Pandemic Unemployment Compensation, the FPUC. So this bucket was that supplemental benefit that was created to subsidize wages further on top of traditional state unemployment benefits. So this was created under the CARES Act. It expired at the end of July, and that supplement was originally $600 per week. So that has now been extended. So under this year-end bill, the federal pandemic unemployment compensation will be restored, and that will be provided to unemployed individuals at an additional $300 per week versus the original $600. And there will be 10 weeks of availability covering December 26, 2020 to March 14th, 2021. So based on our research, it looks like right now about 20 of the states have already started paying out those benefits. So if you are still receiving unemployment and are eligible for these, those should be automatically added. But we have been told, or based on our research, we're seeing that states that have not already started paying as of that December 26th date will be back paying. So if you haven't started receiving those benefits yet, don't fret. Like I said, only about 20 of the states so far are actively distributing that supplemental $300 per week, but we expect the rest to begin later this week or early next week. So the next bucket is the pandemic emergency unemployment compensation. So PEUC was the program that was designed to provide additional weeks of assistance when state unemployment runs out. So every state had a different base number of weeks of unemployment, the shortest being about 10, the longest being up to 30 or 40 weeks. But the program was essentially designed for the federal government to supplement once you had run out of that original unemployment compensation. And so the original bill under the CARES Act added 13 weeks of PEUC that you were eligible for. This bill is going to up that from 13 to 24 weeks. So this is designed to cover folks who may potentially have used up or are coming close to having used up those additional 13 weeks of benefits. We should note, however, if you did go on to unemployment later in the process and you have not yet used up all of those weeks of eligibility, regardless of how many weeks of eligibility you have, all benefits will stop being paid out under this program on April 5th, 2021. So the maximum is that 24 weeks, but if you won't have used those all by April 5th, 2021, you will forfeit the remainder of those weeks. I should also note that this program is going to start to phase out, so no new applicants will be accepted after March 14th. So if you do go on to unemployment after March 14th, you won't be able to apply for these additional weeks. And that's going to be the same with this next program that we cover, that we're going to have a similar phase out as well. So the next program is the Pandemic Unemployment Assistance. So this is that temporary program created under the CARES Act to cover folks who are self-employed, folks in the gig economy. So definitely a lot of the independent contractors in our space, our independent advisors, have been able to benefit from this program. So the good news for this is that year-end bill is going to extend benefits through April 5th, 2021. Again, this program is going to phase out, so no new applicants will be accepted after March 14th, but for folks already in the program, you'll be able to continue to take advantage of those benefits through April 5th. Again, the amount being paid out is going to vary by state because it is administered through state unemployment programs. And once again, this bill is going to increase the number of weeks available in that pandemic unemployment assistance. So it was originally 39 weeks. That's going to get bumped up to 50 to cover folks who may have used up or are almost about to use up those benefits. However, once again, all benefits are going to end for this program on April 5th, 2021, regardless of additional availability that you may have there. So last, I did just want to flag, there were some additional changes to the program designed to sort of enhance some of the auditing functions and some of the oversight functions from the federal government here. So there is a new requirement I did want to flag for everyone that effective January 31st, 2021, folks who are receiving that PUA benefit are going to have to submit documentation to substantiate their employment or prove their self-employment. So new applicants will have to submit documentation within 21 days of receiving unemployment benefits, and individuals who are already claiming PUA as of January 31st will have 90 days to submit that documentation. Now, as Eben mentioned with the program with SBA, with these tight deadlines, none of this guidance has actually come out yet, and we believe each state might actually be coming up with their own paperwork and their own requirements for certification, as has been the case with a lot of these programs that are funded by the federal government but administered by the states. It's sort of left to every state to come up with how they want to apply these rules. But did just want to flag that for folks. Again, as we have more information and more guidance, we'll update our members on what the requirements are going to be. It'll likely be state by state. But just to make folks aware, for anyone that is receiving that pandemic unemployment assistance, that there will be some additional documentation that will be required down the line. So with that, just some quick suggested next steps. So again, a reminder that these programs will continue to be administered by each individual state. So while they're being funded by the federal government, it will fall to each state to decide on implementation and to move at their own pace to get these done. Unfortunately, some states are moving fast and some are moving a little slower. So if you have any questions on your eligibility for these benefits, if you're wanting to apply for these programs and you've not already done so, you're going to reach out to your state unemployment insurance office. And if you're already receiving benefits under one of these programs, our understanding is that for the most part, you should not need to reapply, that these benefits should just continue through this extension. But if we do become aware of any states where that's not the case, we'll of course notify members of that as well. So those are the three big buckets of unemployment that we've covered. And with that, we are going to take some time to turn to questions. And so I'm going to open up this first question here to Eben in regards to PPP. So there were rules in regards to maintaining salaries in the first round. Is that going to be the case with the second round of PPP? And if so, is that going to be using 2019 salaries or 2020 salaries?
I think that might be one that has to wait for SBA guidance. I will have to double check the law language, but I believe that that would be an SBA call, which again, hopefully we'll see in the next week or so.
Great. So Peter, then a question for you on ERTC. We had a number of folks on the line who are 1099 ICs, and they just wanted some clarity that ERTC does or does not apply to 1099s.
Yeah, it's a good question. It all depends on whether the IC has any employees of his or her own. So if we're talking about, for example, a hosted agent, they would be an IC with respect to the host agency. If they have employees under them who are W-2, then absolutely they can claim the ERTC. If they're flying solo and they don't have any employees, or they've got some sub contractors underneath them, then unfortunately they're not eligible to claim the ERTC. The claimant must have at least one or more W-2 employees.
Perfect. Thanks, Peter. So, Eben, another question for you on PPP. You mentioned that tax exemption change to PPP. Will this apply to federal and state tax, or will this apply just to federal taxes?
Federal only. This is making tweaks to the federal tax code, unfortunately, just federal.
Perfect. Thank you. So another question for you, Eben, on PPP. Is there any better clarity now for the safe harbors for PPP and how those might apply to travel agencies?
Yeah, this is something that we've been working on for about 6 months. SBA last year put out a lot of guidance and Q&A and whatnot like early in the year, but they did a lot less so later in the year. So when Congress changed the rules in June and created these new safe harbors, it has not been addressed in writing. However, having said that, we had a number of conversations, I'm talking close to double digits, with folks at Treasury and SBA as to whether these safe harbors apply to us. It mentions guidance from the CDC, and the CDC's guidance with regard to travel has been very clear in terms of, especially with regard to cruise travel over the years. And we were told informally that that counts as CDC guidance and that you can claim this safe harbor. I'm aware of a number of members who have claimed it. I'm not aware as I'm speaking that they've successfully been able to get the full loan forgiven. Perhaps just the process as a whole is moving slowly, but we have confidence that you all can use that. And I'm not sure if Peter has anything he wanted to add to that.
No, I think you covered it, Evan. Thanks.
Great. So we do have a question here for you, Peter, in regards to ERTC. Is there any correlation or effect for folks that receive that EIDL advance on their ability to take ERTC?
No, there isn't. There really isn't any correlation there, and I think that has a lot to do with the fact that, as you all will recall, the EIDL loans did not have a forgivable component to them, whereas the PPP did. So it made some logical sense to kind of, again, to prevent the double dipping, to create some limitations there, which have now, of course, been been lifted somewhat. But the short answer to the question is no.
Perfect. Thank you. All right. So one more for you, Evan. Is there any guidance for those who didn't participate in the first round draw on PPP? So folks that didn't take advantage of the program the first go around are interested in doing a first time PPP loan. Do you know where they could find some additional information and some help on getting started there?
Well, we know that of the almost $300 billion that was set aside for this, $35 billion will be for first-time PPP applicants. I believe the parameters that I went through with regard to the second loans, that applies for the first loans as well. So 2.5 times monthly payroll, $2 million cap. I expect SBA is going to have to deal with this as one of their first FAQs, which hopefully, again, we'll see in the next week or so. But the advice is the same as to people who've already taken one. You know, find a bank that's going to participate and sort of get in line. I think the benefit of this round versus even if you're a first-time borrower is that Congress did make some changes, but the basic program has already been functioning for 7 months or so. So banks are comfortable with how it's going to work, and they'll be able to make pretty quick decisions as to whether or not they're going to participate. So start talking to your bank, and I'm sure your peers in the industry will be happy to provide recommendations.
Great, and I did also just want to mention, we do still have a member site that's in the process of being updated, asta.org/COVID-19 member. And we do have a whole section there on PPP, on what documentation is required, how the qualifications work, as well as some information on filling out the applications that were used the first go round. So while again, there's not a perfect analogy to those second set of loans or the second set of funding here, you may wish to go through some of that documentation now to help familiarize yourself with the program and get ready for when applications do open.
Yeah, Genevieve, this is Evan. There was another question about who they can reach out to at ASTA for assistance. So there's really two ways. There's the website that Genevieve referenced, asta.org/COVID-19 member. You can also send an email to government affairs, GOVT affairs@asta.org. We last year answered every single email that we got with a lot of the kind of questions that I'm seeing in the pane here. We will get back to you. I expect we're going to get a lot of questions, especially for the first 3-4 weeks or so. But please, if you have a specific question, reach out to us and we will get you an answer as quickly as possible.
Great. So there are lots more questions. I think there are just a few more that are kind of for the good of the order. The ones that are more specific, as Evan mentioned, we definitely want to give you a hand with those. But if you've got, really specific instances here, probably better for us to reply to you in person. So we are collecting all these questions and we'll get back to folks as soon as possible. But a few more here for the good of the order. Peter, you mentioned on the ERTC qualified wages. Can you give us a little bit more information about what qualified wages are defined as?
Yeah, that's a great question, and I imagine that when you all were listening to the presentation, that was a little bit conspicuously absent from my remarks, and unfortunately there was a reason for that, and that is that there isn't a simple answer to the question, but it depends largely on how many employees the employer has. We talked about how the threshold was raised from 100 to 500. That relates directly to the definition of qualified wages. To kind of briefly address this, essentially, if the employer has 500, more than 500 employees, then qualified wages are those wages as well as certain healthcare costs that are paid to employees that are not providing services because of either the the decline in revenue or the suspension of the operation. So basically, if you're more than 500 employees, we're talking about folks who are getting paid for not doing anything. Whereas if you are 500 employees or less, it's a much more beneficial definition of qualified wages. It includes wages paid to any employee during that period of economic decline or shutdown, regardless of whether or not that employee is providing any services to the employer or not. So obviously, it's a much more expansive definition if you are considered a small employer. And that was what I was trying to capture when talking about how you may want to go back if you're between 100 and 500 employees to see whether or not your treatment will be significantly better under 2021's rules than they were under 2020's rules.
Perfect. Thank you, Peter. So there's a question here about unemployment that I'll tackle in a more general sense. So this particular person's unemployment ran out in November, and they're wondering if they'll be able to collect that new $300 per week. So for folks whose unemployment benefits have already run out, there will be sort of two new sources available. If you are someone who was originally eligible for that $600 per week, you'll now be eligible for that $300 per week, and that will cover the period starting December 26th onwards through April 5th. There is also additional weeks that have been added for the other two buckets of unemployment. So if your unemployment has run out prior to this act coming into place, and additional weeks have now been added, you should be able to reapply. And once states have these programs in place for the extended time periods, you should be able to begin receiving those benefits. In terms of specifically the $300, again, there's right now about 20 states or so that have already started paying that, and the remainder we expect should be online soon. But again, as we have a little more clarity on that $300 per week, we will pass that information along.
Hey, Genevieve, it's Eben.
Yes.
There's one that I wanted to address. The question was, what out of this new package benefits agencies, agents, and owners directly? And follow-up, the airlines got $15 billion. What did travel get out of this? I wanted to make the point that our goal going into this next round, which started in April, sorry to say, was to make sure our members got as much relief as possible for the broadest range of travel agencies as possible. We were able to get some dedicated funding in the CARES Act, the ability to apply for Treasury loans. That program, compared to PPP, was a disaster. Treasury didn't issue a single loan for 8 months. Most of the loans went to airlines, no surprise there. The point I'm trying to make is dedicated funding, sometimes not all it's cracked up to be. Also, we had every industry group in the entire country advocating for specific relief for themselves, including us. We tried to get added as a contractor to the airline money. There's a lot less airline money than there was in the first round. We weren't able to do that. Airlines got some, of course. Live events got some. I credit Senator Schumer and Broadway for that. Everybody else gets a lot of benefits out of this, not necessarily specific. Restaurants, hotels, gyms, a long list of others. So we're going to keep fighting. We're not done. President-elect Biden says this last bill was a down payment on relief that's needed. We agree with that. We have priorities that we're pushing, including the Restart Act that Zane referenced, which would be forgivable loans, and the forgiveness is based on how far down your revenue is. We're going to keep pushing on that. That had 60 co-sponsors at the end of the Congress and the Senate, which is filibuster-proof. We're going to keep fighting on your behalf. I just wanted to make that point.
Thanks, Eben. So just a couple more questions for the good of the order here, and then we will wrap up at the top of the hour here. So we have a question here that I think maybe, Evan, if you would like to try and answer, can folks who are ICs or self-employed receive both the PUA unemployment and PPP?
Peter will probably want to weigh in on this because we dealt with it during the first round. I think there's risk involved in trying to do both at the same time. Peter, help me out here.
Yeah, sure, Eben. Yeah, this is kind of an evergreen question for us. The new law apparently has not really clarified this to any great degree. Our standard advice is that it seems like it ought not be something that you can avail yourself of, which is to say to take both at the same time. However, we were not able to find anything in the original CARES Act that prevented it. So what our standard advice was to our members who asked the question was, if you feel compelled to do it, go ahead and proceed, but be prepared that you may have to repay some of that pandemic unemployment assistance should there be a clarification coming from Treasury or elsewhere that you're not allowed to claim both at the same time. So unfortunately, this is still something of a gray area, and we would advise everyone to proceed with caution if they're contemplating doing that.
So Peter, just to follow up on that, you did clarify that that's taking both at the same time, correct? So if I've taken out a PPP loan and subsequently would like to go on unemployment after my PPP loan has expired, is that something that's possible?
Yes, and thank you for clarifying that for me, Genevieve. I realize now my answer probably wasn't as clear as it ought to be, but yes, we're talking about taking PPP and PUA at the same time. If we're talking about different periods of time, then we don't believe there's any impediment there.
Perfect. So Peter, one more question for you about ERTC. How is that going to work for folks who are S corps or are other kind of pass-through businesses?
Yeah, that's a very good question too, and thank you for raising that one. I have not seen anything to suggest that a subchapter S corp, which is the election under the tax code, would impact one's ability to take the credit. What I would say though, what I would caution though, there is guidance that states that if you are the sole employee, that is to say you're the owner of your S corp and you're paying yourself a salary as an employee, that is not going to be that's not going to be included within your qualified wages. So if you're the sole employee, then I don't think it's going to work for you under the ERTC. But if you have one or more bona fide W-2s, then yes, you can claim it.
That's perfect. Thank you, Peter. So with that, I think that that's probably all of the questions here that are for the good of the order. Lots more questions here that, delved into some more specific situations. So I'm just going to repeat again quickly, asta.org/COVID19MEMBER is the website where we've got some additional information that'll be revamped with some more documentation as we learn a little further and get further guidance on these new programs. Additionally, you can email the Government Affairs team, govtairs@asta.org. So thank you again so much to everybody for taking the time to join us today. As mentioned, this webinar was recorded, so if you would like to listen to the presentation again, it will be available on asta.org for viewing as soon as possible. So with this, thank you everyone for joining us for today's presentation, and we hope everyone has a wonderful afternoon.